I've been dying to check in with you on the China news and this notion that at least Morgan Stanley thinks the market's hinting at, and that is that China truly turns more inward and puts all kinds of operating profit at risk.
Well, I think what you're watching is a carefully structured launch by the Chinese. I think that it's not an accident that all this stuff about potentially boycotting Apple products comes out at just the time when the Huawei phone comes out. I think they scheduled it for the release of the Huawei phone to get the kind of headlines they needed. And I'm not sure that it's a full declaration of war, but I do think it's the means of the Chinese officials to say, we up the ante. And now we'll have to watch and see what happens with the G20 meeting. China's boycotting that. So let's see if there's commentary around that. So I think, as usual, Sarah's spot on. It could be a maybe not a world-class event, but an important event. And I do think it means that China is upping the ante. But full-scale war, not quite yet. We've got a way to go.
It doesn't sound like you think yields or certainly oil have given enough solace to the bulls to make a run here.
Well, the yields, I mean, you could take any new sticker you have and throw it out the window. The market is slavishly following the yield on the 10-year. There's an important testing area between 4.25 and 4.35. When it starts to get up around 4.25, that starts to put some negative pressure on equities. If they were to get up to 430, then that would put extra pressure on. And heaven forbid we get up to 435, then I think you'd see a short selling show up. So for now, the fact that the yield has eased back from 425 toward 420 is what has given us the bids that we have in the market today. And I think you could virtually ignore any news that's out there. I mean, the Chinese news is important. Everything else is to be watched. But as to what's moving the market, it's purely the yields. They've got these algorithms trained. And, if you're playing the game at home, folks, just watch that range in yields down around 420. You've got bids coming into the equity market. You get up around 425, those bids will disappear. Will sellers show up? Yes, if you get up above 425 toward 430. So it's a pretty good thermometer to watch.
On that note, Art, I feel like there's a split and mixed opinion about where the trend of yields goes. You can make the argument that yields should come down as the economy continues to cool off, as inflation continues to cool off, though you could also make the case for higher long-term yields on the back of what's happening in Washington and the fiscal irresponsibility and the debt numbers and the debt issuance. Where do you stand?
Well, you raise an interesting point. There is still a lot of unspent stimulus money built into these things, and everybody seems to forget. We all go back and pick on Arthur Burns, and the Fed was tightening, and then it kind of relented, and then inflation got out of hand. No, actually, what was happening then, if you are as old as I am, or can go back and check on some history, you will see that there again, you had fiscal spending going on. And that's what kind of screwed up the Fed. And I think the Fed has got to be very careful here to see what happens with some of that money still in those stimulus programs. Now, I know Powell doesn't like to call attention to it and say anything about fiscal spending policy. But it is a factor. It is something we have got to watch. And if it were to perk up again, then you'd see they'd have trouble. And as to, Sarah, what raised it, I know you're on top of this. We've had a lot of corporate issuance over the last 4 days. And that was big enough. People started to think it was going to go out of hand. We still are having quantitative tightening. The Fed is narrowing its balance sheet. It dropped in another $20 billion or so in yesterday's report. So what we've got to watch for here is there more issuance either by the government or by the corporations?